All right, guys, we're going to start chapter 2 here, and I'm going to do my best to get through this video because this is like my seventh or eighth attempt to get a recording on here for the beginning of chapter 2. A couple things I want to stress to you. Chapter 2 is the foundation of what you guys are going to be learning in accounting, so it's very important that you pay close attention and you pay very close attention to the slides. I need you to do me a favor. If you're trying to do this with just your phone, it's not going to work, okay? You need to be able to follow along with the slides, okay? So everything that I'm talking about, you're not looking at anything but your slides. You're listening to me in the background as if you were sitting in front of me in a lecture room, okay? So please keep that in mind. Chapter 2, we're going to start talking about journal entries. And journal entries are the foundation of what we do in accounting. Whether you're in the first level accounting like you guys are, or you're taking a master's degree, journal entries are the biggest part of what you're going to be doing. So please pay attention when I go through these slides and follow along. If I tell you to go to slide 5, go to slide 5, and so on and so forth. So the first thing I want to do is go ahead and open up chapter 2 PowerPoints. And I want you to just go right to the slide number 2. Now, journal entries are based on what we call economic transactions, okay? Things where there's some type of monetary or it affects your position as a business. So you can see from the 2 columns that we have here, we have some examples of things that are not transactions and some that are. First thing I want you to take a quick look at is the left-hand side, which are things that are not economic transactions, things that had no... the main thing I want you to understand is that they have no effect on your financial position. Okay, so let's look at the first one. A customer inquires about a service. Well, let's say you call up your local pizzeria and ask for a price of how much a cheese pie is. Okay, just because you called in and asked how much something was does not make it a transaction. You didn't order anything. All you did was ask how much something was. So that is not going to affect the business's financial situation. Now, the fact that you just got a price, that means nothing. Okay, that's not an economic transaction, which means it would not be changing into a journal entry. All right, another thing, if you ordered supplies, technically you do not have a journal, you do not have an economic transaction yet until you've received those supplies from the person that you ordered them from. Just because you placed an order, you can cancel your orders. So until you actually receive the supplies and do something with them, it is not an economic transaction or not going to be a journal entry. Another example is if you go out and you hire 50 new employees, but none of them ever work a day for you. Well, just because you hired them doesn't mean you owe them anything. Until they've actually physically done work for you, you don't owe them. So hiring a new employee is not necessarily a economic transaction, okay? So the thing with those 3 examples is that there was no economic change. There's no difference in what's happened. So those are the types of things you're going to be asking yourself questions when you're doing journal entries. Now, if you take a look at the things that are economic transactions that are going to be recorded. If a customer actually purchased that said pizza, they called up, they asked how much it was, and they placed the order. That's going to affect the financial position of the business. Okay? When you go and pick up your order, their cash is going to go up, their sales are going to go up, so there's things that are going to happen that we have to pay close attention to. Once you receive those supplies that we talked about, that you ordered, once you receive the supplies, things are going to change. Your supply level is going to go up. So, for example, if you only had $100 worth of supplies and you ordered another $300, the balance in your supplies account is now going to be $400. You just ordered 3, you still had 100, so your new balance in there is going to be 4. So that will change that. And that will cause you to have an economic transaction. Again, just like the new employees, if you hire 50 of them and you only have 2 of them work, you only owe 2 of them money. You don't owe the other 48 money. The fact that they actually did work for you now causes you to have an economic transaction. Now, if you go to slide number 3, you see the word classification. Now, this is important, and this is what I was attempting to talk to you about in the first chapter of being able to look at an account and say to yourself, okay, that is an asset, or that is an expense account, okay? You must be able to classify accounts at this point. You guys all should know that if you see the word receivable, that it is an asset, so that you should be paying close attention to those things. If you have not got your classification down, it's going to be very difficult to do journal entries, okay? So this is the one thing where I need you guys to pay close attention to understand that this is the basis for your accounting understanding, and it's the building blocks that we're going to use. If you're in any of the 4-year degrees and you've got such as business management, you're going to be taking financial, managerial, and then you're going to move on to Mrs. Sturdivant for financial management and things like that. All these items that you're going to be learning are things that we build off of, and you're going to continue to use throughout your college career. So as much as it's going to be painstaking to understand what's going on, it is very important for you to be able to do that. Now, classification, you can use your ALSDRE. Okay, if you see the word payable in a account title, you should know that a word payable means liability. And by now, you should be able to say to yourself, liabilities are located on which financial statement? And hopefully you guys are all saying in your heads, oh, liabilities, they're on my balance sheet. Revenues, oh wait, they're on my income statement. Okay, so it's very important that you guys understand that that was not something to just, oh yeah, he's making up some stupid word called ALSDRE. No, we try to give you as many different acronyms as we can to help you guys understand and process and continue to learn these things that you're going to need to know. Okay, classification, it tells you, is just the process of assigning transaction to the appropriate accounts. And you'll understand more what that means here when we get down to the next slide on the next one. Proper classification depends on you, mainly you. You need to correctly analyze, meaning you have to take a look at the scenario and understand what's happening. There's going to be a lot of rules that are going to come into play here, and I'm going to try to explain them and point them out to you guys. And it's going to be very important. And this is where some of you guys are going to have to take some notes, as much as I know it's difficult to take notes in class. It's going to be very important for you guys to understand the following topics that are going to come up now. So with that being said, I want you to go ahead and move on to slide number 4. Now, accounting is based on what we call a double entry system. Okay, for every reaction type of situation, there's something that happens. So in this case, what we mean by that is for every economic event, there's 2 things that are going to happen, and everything has to balance out. When it comes to journal entries, and these are some of the things I want you to make notes on your piece of paper here as you're listening. So take out a sheet of paper and write down some of the following rules that I'm going to be talking to you about. Excuse me. Number 1, whenever you have journal entries, they must balance. Okay? You're going to hear me talk about the left side, the right side. When it comes down to doing a journal entry, your left side and your right side have to balance. So if you've got $7,000 on the left-hand side, you need to make sure that you have $7,000 on the right-hand side. Now, what I mean by left and right, you're going to hear me say left and right, and then you're going to hear me use the terms debit and credit. Debit, whenever you debit something, it's going to be on the left. Whenever you credit something, it's going to be on the right. Okay, and you can use those terms interchangeably. So if I say you're going to put $7,000 in on the left, that's another word for saying you're going to debit that account for $7,000. If I say you're going to credit something, you're going to put whatever that amount is, say $1,000, on the right-hand side of your journal entry. Now, when it comes to journal entries, again, I cannot stress this enough. Journal entries are something you're learning online right now, and there's no getting around doing them. Every semester, journal entries are the things that students cannot stand. But I will tell you right now, embrace them, understand them. The sooner you understand them and understand that there's no getting around them, the better off you're going to be. When you get to managerial, the managerial class starts. Chapter 10, which is in managerial, it's the first chapter we do there. You start off with preparing 7 different journal entries right off the bat. And every one of those journal entries is worth 5 points apiece. That 35 points worth of journal entries is 35 points of their first exam. So when I tell you getting a very important basic knowledge of journal entries now will help save your headache later. Okay? So the first rules that I need you to understand when it comes to journal entries is number 1, journal entries have to balance. Number 2, there's a left and a right-hand side. The left-hand side is debit. The right-hand side is going to be what we call our credit. Okay? So when it comes to journal entries, it talks about a double entry system. Okay? You put in a good effort, you're going to get, hopefully, a good reward. Okay? So as students, the more effort you put into a class, you should get a better grade. Okay, another type of situation or another example is if you sacrifice something, usually there's a benefit for you at the end. All right, these are just things to understand that there's a give and take relationship when it comes to journal entries. All right, so please keep that in mind. If you take a look at the yellow box on the bottom of slide number 4, it talks about an example. Okay, here it says we pay cash to purchase supplies. All right, well, the one thing I want you to pay attention to is really what I want you to get out of this little box is not so much cash paid as the effort source, blah, blah, blah. I want you to understand something. You're giving a company money, so your cash is going down. Let me rephrase this. You're giving a company money. So what we're doing the company's books right now. So the company is going to be getting cash from you, which means their cash is going to be going up. They are selling you supplies. Okay? So their supplies are going to be going down. Okay? And what I need you guys to understand is that there's going to be 2 parts, possibly more. But for right now, I just want you to understand this. There's going to be 2 parts to every journal entry. And again, it's kind of like the cause and the effect. Okay? If you take a look at slide number 5 at this point, it's going to give you a definition of what the account or what we consider an account's definition is. Accounts are just basic storage units for accounting data and are used to accumulate the amount from similar transactions. Now, this is very simple, okay? Think of it as a wallet, okay? An account is the same thing as a wallet or a purse. You put money in, you take money out. Okay? So for instance, if you get paid on Friday and you cash your check and you have $100, you put it in your wallet. You go to the mall, you spend $20. You take $20 out of your wallet, that leaves you $80. So literally think of the account as if it was a wallet or a purse. You put money in, you take money out. At any point in time, you can go into the wallet and you can count, 20, 40, 60, 10, blah, blah, blah. It'll tell you how much money's in there. That is in essence what an account is. It's a wallet for each individual type of an account. You're going to have an account for cash. You're going to have an account for accounts receivable. You're going to have an account for all those things that we spoke about when you were doing your financial statements. Okay? Every single thing that you use to prepare your financial statements was an account. You may not have realized that, but each one of those was an account. And the main thing with accounts are they're just basic storage units that hold the monetary value of what it's talking about. Pretty easy definition. All right, moving on to number 6. Now, here's where we're going to get into things. You could see right at the very bottom of slide number 6, it says, it is important to remember this. It's in bold and capped. So, in other words, I'm pretty much screaming this at you. This slide is something to remember. So let's talk about what they call the principle of duality. Now, you're not going to have to know the principle of this. You just need to know the background behind it. I'm not going to ask you to tell me what the principles of duality is, because if you know how to do a journal entry and you do your journal entries correctly, I'll know that you understand what we're talking about from this slide. All right? So the first thing you got to make sure you understand that whenever we're preparing journal entries, that each transaction, meaning each journal entry, is recorded with at least one debit, meaning one thing on the left, and one credit, meaning one thing on the right. All right? Every journal entry has to have a debit and a credit. Second rule that you need to pay attention to is that the total amount of the debits, if you have more than one debit at one time, it's not something that's wrong. No, excuse me. It's not something that's wrong. But the key on point number 2 is that your debits must equal your credits. So if you debit an account for $2,000, you need to have an offsetting credit for $2,000. Okay? Debits have to equal your credits. There's no ifs, ands, or buts about it. All right? Next thing, it says that every transaction will maintain this balance, meaning every journal entry you do has to balance. If you debit $500, you should have a credit for $500. Or I should say you will have a credit for $500. All right? So three things to keep in mind. The next slide is probably the most important slide when it comes to accounting and doing work like this. So what I'm going to do is I'm going to stop the video here, and I want you guys to review the video or review the voice recording of the video. And make sure that you understand how important slide number 6 is. Slide 6 is so important for you to understand. It's almost as important as slide number 7, which we're going to do on the next video. Please, I cannot say this enough, and I'm going to recap a little bit here. Number 1, whenever preparing journal entries, you've got to say to yourself, is this an economic transaction or is this not a transaction? We are only concerned with the ones that are transactions, meaning they have happened. Does everybody understand that? The next thing I need you to understand is that when we're preparing journal entries, the left-hand side is what we're going to call our debits. The right-hand side is what we call credits. Okay? Debits and credits, left and right. Next thing you got to make sure that you pay attention to is that whenever you're preparing journal entries, they must balance. If you debit cash for $200, you need to have some credit for it for $200. The other part is that will always stay in balance. Okay? It's so imperative that you guys get these rules down. that you understand those key points. I'm not even going to go through them again and bore you. You can listen to these lectures over and over and over and over again. So please, 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 please pay close attention to those principles. They're just as important as the next set of principles that I'm going to start off the next video with. So please stay safe, and I'll be back in a moment.